Hi guys, it's Marissa and James here, and today we're bringing you another client scenario of someone that we've recently helped. So James, how are you going?
Good, thanks.
And can you give us an example of a client that you've recently helped and how you've helped them?
Sure. So I've recently had one of our existing clients come to me that we've been working with for a number of years, and she's an investor. When we caught up for our annual review, she was quite concerned about some of her investment loans that had been interest only for a long period of time, and they were due to some of the interest only terms were due to expire, over the coming 3 to 6 months. So she really wanted to get a clear understanding of what that was actually going to mean for her in terms of cash flow. Because when the interest only term expires, the repayments will automatically revert to principal and interest, and the repayments will increase quite considerably. So that was, a real area of concern for her that we focused on and started looking at solutions.
Yeah, I mean, it's a big issue for a lot of investors or even for homeowners that have had their loan on interest only because, 5 years ago it was really easy to just continue rolling over those interest only periods, but now we're at a point where to extend your interest only period you have to go through a full credit assessment. It's quite an in-depth process, or the same sort of processes would take to, doing your application. So it's probably quite common these days that people will come to the end of their interest only periods and not be able to renew that interest only period. And, do you find that is causing clients some, some level of anxiety or some level of stress?
Yes, it is.
Yeah.
And through some of the amazing work that Louise is doing, we're actually being proactive and contacting our clients on a regular basis and really looking ahead. So rather than waiting until a month before the interest only term is due to expire, we're actually, looking at least 12 months out, trying to plan for that. And are there certain things that we could put in place now to prepare for when the interest only term expires?
And that's really the key, isn't it? The key is being proactive in having a debt management strategy and in making sure that when it does revert to principal and interest, if that's what is decided is the best thing to do, that the repayments are still really manageable within the budget or within your budget or within your cash flow. So how so this client here who you were able to help through that process, sort of what did she decide to do following the review?
So she had a combination of, she had about 3 investment properties with investment loans that were all on interest only. And some of them had been on interest only for 5 years. Some of them had been on interest only for 8 years.
Of course, the longer the interest only period, the more the repayment's going to jump when it converts to P&I, because there's a smaller term for the principal to be paid over. So that's sort of a big
and that's what I was explaining to her, that the standard investment loans are 30-year term. And if it's interest only, it'll be interest only for the first 5 years. And then after that 5 years, it will revert to principal and interest over the remaining 25. And some investors have gone further than the first 5 years interest only. They might have extended it for another 5 years. So they could potentially have 10 years interest only, which then means that the loan will revert to principal and interest over the remaining 20 years. So in those instances, the repayments could skyrocket.
So it's a big issue. So how did she feel going through that process with you, and what was sort of the outcome at the end of the day?
So we got a great outcome. So we were able to review all of that and put a plan in place, and we executed on that plan, which was to take those investment loans and refinance them into new investment loans with a new 30-year loan term. And we had a discussion around whether it still made sense to go interest only for the investment loans with the new investment loans, or to start on principal and interest. And in this case, she decided that she wanted to start principal and interest over a 30-year term.
And what were the main driving reasons behind why she decided to revert to principal and interest over a 30-year term?
So a couple of things. The main one was just based on where she was in her cycle life cycle as a property investor. She was at that stage now where she'd bought the properties that she wanted to buy.
Yep.
She wasn't looking to buy any more properties or invest any further. So, and a home loan had been paid off. So now it was really a strategy around slowly reducing the investment debt over time. So that's where principal and interest repayments made sense from that perspective. And the other thing as well is that she didn't want to get caught again in another 5 years
Yep.
with another, period or another surprise where, okay, well now if you go 5 years interest only again, you're going to have the same problem in 5 years' time.
That's right.
So by going principal and interest from day one over the new 30-year term,
that problem.
yeah, so she doesn't have any expiries or surprises down the track that she needs to plan for.
Did she also get a more attractive interest rate reverting to principal and interest as opposed to what she was paying on interest only?
Yeah, we got about 1% lower in the end.
1% lower.
Yeah.
Wow. So I guess there is that incentive of a much lower interest rate if you can look at principal and interest repayments as opposed to interest only. So there's quite a few incentives there to consider it. So I guess if you do currently have interest only loans, like James said, it's really important to get proactive with what you're going to do when the interest only period expires. And it could either be that you're going to try and renew the interest only period, and if so, you're going to do that with the existing bank or with another bank, or you might look to revert to principal and interest repayments, and then what does that look like, and how do you make sure that you get the best rate possible at that time? That's a really good discussion to be having with your mortgage broker, especially your Rise High mortgage broker. So that's definitely something that we'd love to help you with, and we're really good at that. So please come and speak to us if you've got some interest only loans that you want to discuss. That's just about it. Is there any other tips you think you'd like to share?
We've got some good content on the YouTube channel as well. So so on Rise High TV, if you want to jump on there and have a look at some of the information on there. Marissa's got a great video about interest only versus principal and interest, and some other great content as well that for people that are thinking about what their options are, they could jump on there and get some information while they're laying in bed at night on their phone.
Yeah, sounds good. Thanks for joining us today. We'll speak to you again soon. Bye.